welcome to Markets Today, a show where we talk about the market happenings of the day and more. Today, the ringgit closed at 4.2845 against the USD, and the Bursa Malaysia closed 4.6 points lower at 177.1.62 points. Today, we'll delve further into the second quarter results that we all saw Bank Negara announce last Friday and talk about the things that didn't really get the headlines. Before we go further, here's a recap of it.
Ekonomi negara mencatatkan pertumbuhan yang memberangsangkan sebanyak 5.8% pada suku kedua dan terus disokong oleh permintaan dalam negeri. Headline inflation moderated to 4% in the second quarter of 2017. The first quarter numbers was 4.3%. It declined from its peak in March of 5.1% to 3.6% in June. The ringgit appreciated by 3.1% in the second quarter of 2017 amid non-resident inflows into Malaysia's financial market and was the best performing currency in the region during the quarter. The ringgit has retraced the depreciation in 2016, so somewhat we have recovered, partly. It is likely that the Malaysian economy will grow beyond what we had earlier forecasted, but a new number will be announced by the Minister of Finance in the budget in 2017, October.
All right, joining me to discuss more on the line is Dr. Afza Nizam Abdul Rashid. He's the Chief Economist of Bank Islam. Dr. Afza, thank you so much for joining us.
You're welcome.
Doctor, first of all, the second quarter GDP grew 5.8%. This exceeded the first quarter results and also exceeded most expectations. A key driving force behind the strong numbers was strong exports. But the bulk of the exports come first from the E&E sector, electrics and electronics, and the bulk of it are exported to China. So given these limitations, do you think the growth momentum is sustainable?
Well, I think if you drill down in terms of contribution to growth, it's actually the sources of growth still coming from the domestic demand, especially on the private consumptions. And as you know, private consumption has grown to 7.1% in the second quarter. This is actually above than what we call the trajectory for private consumptions. If you look at the first quarter 2010 until the second quarter 2017, in terms of average private consumption is about 6.9%. So clearly that consumer spending in the second quarter has actually improved tremendously.
But still, I'm not saying that the main contributor is exports, but it is a huge chunk. It is a very notable part of what contributes to the GDP. So do you think these limitations will provide any downside risks to future quarters' growth?
Yes, definitely. I mean, if you're looking from the context of geopolitical risk, obviously this is the wild cards, you know. And if you look at what happens in between North Korea and US, no one knows what will be the eventualities, you know. But at least from the economic point of view, I mean, from the real economy, if you look at the ISM indices, the sentiment among consumers in the US has actually improved quite a lot. In fact, China's economy is still, stabilizing at a respectable pace. So that should give us some comfort that the external demand will continue to do well, at least in the next second half of the year.
Right. Nonetheless, we're talking about forecasts and the way forward. Well, the central bank's own initial forecast for the whole of this year, 2017, was between 4.3 to 4.8%. So given the results of the first two quarters of this year, do you think it is a foregone conclusion that they will exceed this forecast?
Yeah, sure. I think the reason why people are very pessimistic earlier on is because of the consumer spending. And true enough, if you look at the Consumer Sentiment Index published by the MIR, it continued to linger below 100 points for, I think, for about 2 years already. So yes, there's some improvement in terms of the Consumer Sentiment Index, but it's still below the 100-point benchmark. that I think the reason why we think, I mean, among economists, we are so quite pessimistic in the early of the year. And that's the reason why we are looking, a sub 5% growth when we do our forecast for 2017. But now, I think looking at the current momentum, I think it's not fair to say that the economy will actually grow below 5% when you know your first half numbers is already beyond 5%. It's actually 5.7% in the first half.
But even the central banks themselves are a bit hesitant or even a bit pessimistic, because when asked whether they are willing to revise the GDP growth forecast upwards, they were a bit hesitant. They say MOF is going to announce it in the upcoming budget. So why do you think this is? Do they want to manage expectations, or do they not trust the global trade will stabilize, at least for the remaining of this year?
I'm not too sure the real reason behind it, but from what I can see is that the uncertainties on the global front with respect to geopolitical risk that I mentioned before, and perhaps Brexit to some extent would play a role to some degree in terms of how it can affect in terms of consumer sentiment, business sentiment. But for now, it seems that sentiment is doing okay, more than okay actually. But of course, there's always a pockets of uncertainties that may somehow tweak how we feel about the economy going forward.
Right, Doctor, we don't have much time left, but I just want to get this question out. I mean, the ringgit is always, of course, one of the most important things that we pay attention to. It is the best, the region's best performing currency, at least for the second quarter. So do you think this momentum will be sustained by the local currency, and why?
I think it's a function of, obviously, from the external sector, primarily on the Federal Reserve, U.S. Federal Reserve, with respect to their decision on the rate hike. At the moment, they are focusing on the balance sheet, and therefore the talks of rate hike decision somehow take a back burner at the moment. But I think I think people are pay a close attention on how the Fed will actually manage the reduction of the balance sheet size. I think that's the main worry at the moment, because it's going to have an impact in terms of U.S. Treasury markets, and that also can have a direct implication in terms of our government bonds.
All right, thank you so much, Dr. Afzanizam Abdul Rashid, for joining us to discuss the second quarter results. He's the Chief Economist of Bank Islam, and we'll talk more about second quarter results after the break. We'll take a short break. Markets today will be right back. Don't go anywhere. Welcome back to Markets Today with me, Luqman Hariz. We've been speaking about the second quarter results that was announced last week, and we talked about the macro in the first half of the show. And now let's talk about something more close to the consumer end, which is the household debt, which some are debating is at an alarming level. And with me to discuss more is Shan Said. He's the Chief Economist of property investment firm IQI Global. Shan, thanks for joining us again. First of all, I just want to turn your attention to the debt to GDP ratio, which now stands at 85.6%. Should we be worried?
I think in any growing economy, people take on debt, and it is perfectly normal. The economy does not run on one single variable. There are so many other variables. So the household debt, if you see, previously it was around 87-88%. It has come down to 85%. People are deleveraging, they are paying off their loans. So this is not something to be concerned about.
All right, you are from a property firm or property investment firm. Bank Negara data shows that the largest contributor to household debt is for the purchase of property. And its share in the debt pie has been increasing for the past 6 years. Are we making it too easy for people to buy homes they cannot afford, Chan?
I think people are still buying homes because if you look at ASEAN region, Malaysia is still very much undervalued. And there are still so many opportunities in Malaysia that sophisticated investors can see those opportunities and they want to avail those opportunities. So I think property buying in Malaysia is still very attractive because of two factors. One is Malaysia's strategic location, and secondly, because of strong economic confidence in the economy.
You know, 65% of homes that were built are in the 250,000 to 500,000 ringgit range. Are we building more and more homes that the public cannot really afford?
I think demand is still inelastic, and as you rightly said, there is not enough supply coming into the market. And demographics is rising. In 2011, Malaysia's population was 29 million. Now, as I speak with you right now, the population of Malaysia is 32 million. So we have to figure it out, how to bring more supplies to the market in order to keep up with the demand. The demand is still very strong, as I said, because of Malaysia's demographic. Infrastructure of Malaysia is very world-class, and the income levels are rising.
But you are arguing that supply is not enough, if I hear it correctly. But a lot of quarters are arguing it's exactly the opposite. We've been supplying too many homes and too many commercial properties as well. And to add to that, is in the price range that most people cannot afford. So are you saying that we are not supplying enough?
I think there are some areas where there are more supplies, and there are some areas, where there are shortage of supplies. I can give you some examples, some hot areas of KL, like Old Klang Road, Bangsar South, where demand is very strong. And most of the sophisticated investors, they just want to, snap up those properties because it's a value buy. So yes, there are some areas where they are oversupplied because, the demographics is not there, the population is not there. But, it could be a short-term measure, but long-term, I don't see any problem. But the concerns are, I think, I would say it's overblown.
It's over, right. Nevertheless, in the first quarter of FY17, NAPIC says unsold residential homes amounted to about 13,000 units. The same trend pretty much can be seen with commercial properties. So is there a real worry of a property bubble here in Malaysia that's about to burst?
I think I have shared with you and with many other TV channels, a bubble happens when the land prices are crashing. So you tell me any area in KL or in Penang or in Johor Bahru where land prices are crashing. The answer is not a single area when land prices are crashing. In fact, the land prices in KL or in Penang or in Johor Bahru, they are moving up quite quickly.
That's the idea of a bubble, isn't it? It will increase to a point that it's not sustainable, and one day it will probably burst. So if you ask me whether land prices are rising, are declining, of course it's not now. But then again, there's the fear. Are we providing enough? Are we providing homes in the right price range for people to buy, or are we getting ourselves into trouble here?
I think land prices only go up because the investors see value in that. If the investors, they don't see any value in that, then the land prices would never go up. So if you pick up the latest issue of Economist magazine, dated 5th and 11th August, they talk about the same thing, about the bubbles, So bubble happened when the land prices are crashing. But in Malaysia, the land prices are not crashing, they're going up. So that's what I have shared with you and many other TV channels.
All right. Thanks so much, Shan. I wish we can debate more, but we are out of time. I'll get you soon on the show again, I promise. Thanks so much, Shan, Chief Economist of property investment firm IQI Global. And that wraps up this edition of Markets Today. Follow us on all our social media platforms, Facebook, Twitter, Instagram at 511. Download our apps you can see on Google Play and also the Apple App Store. Luqman Hariz, thanks for watching and you have a nice day.